Good evening, everyone, and thank you so much for joining us tonight for our first Spotlight Series event for 2021. I'm Patrick Metzger with the Sustainability Consultant Network, or SCN, and we're very excited to hear from our guest speaker and to have a robust conversation around sustainable investment tonight. Before we start, we respectfully acknowledge the land we're living on as the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. And before we start, just note that we're using the RME platform. We're keenly aware that technology can be unpredictable, and hope if there are any minor disruptions, and we hope there aren't, that you'll be patient with it and that you'll enjoy the experience. You can communicate through the chat box or the question section in the right bar of your screen. And you can also start a one-to-one chat from the attendees section. Please note we're recording the webinar so it can be shared with others later on. A few seconds about us. Sustainability Consultant Network, or SCN, is an environmental grassroots organization. Our mission is to help address environmental challenges facing the communities we live in and beyond. Please connect with us and join us at our webpage, sustainabilityconsultantnetwork.com, and also on Facebook or Instagram. And the links will be posted in the chat. And let me introduce our speaker. Sucheta Rajagopal has been involved in socially responsible investing for over 20 years, advising her clients on how to integrate both environmental, social, and corporate governance issues into their investment portfolios. She's portfolio manager and certified financial planner at Research Capital Corp, and manages one of the largest exclusively socially responsible investing books of business in the country. She's a trailblazer in Canadian SRI, currently a member of the advisory board of Marigold Capital, and she also serves on the board of the Catherine Donnelly Foundation. She has an LLB from Osgoode Hall Law School. She's a certified investment planner, a fellow of Canadian Securities Institute, certified financial planner, and has also earned Canada's Responsible Investment Advisor certification. And without any further ado, I'd like to introduce Sucheta, and this is going to be great. Thank you.
Hi, everybody. Thank you very much for that introduction, Patrick, and thank you to the Sustainability Consultant Network for inviting me to speak today. So I'm happy to be here, and I'm hoping that we can have a great conversation as I explain some of the basics of socially responsible investing to you. So can I have the next slide? And I'll talk a little bit about, so this I have to put up as a disclaimer, but it is very important that the presentation is general. It's not intended as investment advice. And if you are interested in integrating some socially responsible investment strategies into your portfolio, I encourage you to talk to your advisor or to find an advisor who's interested in doing this with you, so that the way that you integrate it is going to be appropriate for your current financial situation. Next slide, please. So we'll talk a little bit. I'm just going to run through how it's going to work. So I will start with talking about what is socially responsible investing. Then I'll address performance of socially responsible investments, which remains a kind of a hot topic, even though I would think it might have been put to rest by now. And then we'll talk about aligning your values with your investments, because that's really what this is about. And then I'll cover some investment vehicles and products. And we will pause there for some questions and answers, because it's a lot of material. And then I'll continue on with some really exciting stories about shareholder engagement, which is how we raise the bar for corporate behavior and push companies to do better on areas that we're interested in. And then we'll have time for some more questions and answers. So I'm really looking at about 2 20-minute presentations with two 10-minute Q&As. So next slide, please. So what is socially responsible investing? So first off, I always joke to people there are a lot of acronyms. So the two that I'm going to be using the most are SRI, which is socially responsible investing, and ESG, which is environmental, social, and governance. What you will be seeing currently is that a lot of this is just called ESG investing, and I'll be explaining a little bit more about the differences between these various things that are under this broad umbrella. So what we are looking at is we're looking at environmental, social, and corporate governance metrics in addition to financial metrics. And what that helps you do is align your investments with your values. So you look at what's important to you, whether that's the environment and climate change, whether it's workers' rights, what's happening in sweatshops around the world. And then you think about, well, what are the companies that I'm invested in? What's their record on these things? It's also an investment strategy, and I think that's very important. It's not just a grab bag of companies that you like. You do have to look at traditional portfolio investment managed principles, and also when you're looking at individual companies, you're also looking at the same types of metrics that every investment professional is using. And then the final part is the engagement part that I'm going to get to towards the end of the presentation, which is about raising the bar for corporate behavior. So as a shareholder, you get to talk to management. You sometimes get to present proposals or resolutions at annual general meetings and have them voted on. And this is also there are no perfect companies. So no matter how much you like a company, there's something that it could be doing better. And certainly there's a broad swath of companies towards the bottom of the corporate behavior where it's pretty easy to think about things they could be doing better. So next slide, please. So this is what I call the zombie myth, because it's the myth that will not die, which is that you sacrifice returns when you choose to invest in a socially responsible manner. When I first started doing this 20 years ago, there was really only anecdotal evidence around this because we didn't have a long track record of socially responsible investing, nor did we have a broad group of people or portfolio managers, assets, funds that we could look at to see, well, what is really happening. I would say at this point, we have 20 years plus of data. And what we are seeing is that you're not sacrificing return. So some people say, well, it's a source of added return, and that may be, and that's something that I personally believe. But certainly I would say there is no doubt at all that you do not sacrifice return. And the second bullet point is what's called a meta study, which is a study of studies. So they've looked at about 2,200 studies on SRI, ESG investing and performance. And they're basically saying that, I love this terminology, but it's a non-negative relation, which means it's a positive relation, right? So they're saying it's you're not giving up performance when you do this. And as I said, I do call this the zombie myth because it's the number one thing you hear. And I thought I'll just get this out of the way before we go any farther. So next slide, please. So I apologize, the slide is a little bit small, but what you do see is you see two lines here right in the center, and that is the MSCI index and the MSCI ESG Leaders Index. And if you actually go online and pull this up, you'll get a better view of it. But you can see towards the very end, the ESG Leaders Index is outperforming. But you can see from the very beginning of this, which is about 13, 14 years of history, I think at this point, that they have been pretty much equal. And so that's a quick visual real world representation of what the studies on the previous slide found. So next slide, please. So this I really like. It's a nice visual that shows you starting on the left, you've got traditional investing where you have competitive returns. You may be looking at some ESG, but you're not really looking at a lot of environmental, social, and governance metrics when you're making your investment decisions. Then you are looking at responsible investing, which is a broad umbrella. Which holds a lot of strategies. And this one is really, once again, you're looking at competitive returns, and you're really looking at environmental and social and governance issues with respect to managing risk. So you're not really thinking about creating a better world, but you are thinking about improving your returns and creating a better portfolio. Then you have socially responsible investing, which is what I specialize in. And this is the first time in this chart where you start to look at values or morality or what you would like to see that is completely non-financial. So this is when you start thinking about what kind of world do we want to build? What kind of world do we want to live in? How do we make the world better? And so this includes negative screening, positive screening, as well as engagement, and then possibly some impact solutions. Then you move to thematic. Thematic is where you're specifically concerned with one thing. So maybe you're looking at climate change to the exclusion of everything else. You're saying, as long as this is good for climate, I don't really care what it does on any other factor. And I think a good example, and I'm not suggesting that this is in thematic portfolios, but just to make this maybe a little clearer to people, is that Walmart is a very large purchaser of renewable energy. They've got solar panels on their warehouses. They're just very, very green. But with respect to labor practices, they're still, anti-union. They're still struggling. So if you were saying, well, you know what, the most important thing to me is the purchasing of renewable energy and the movement towards green in that sense, and I don't really care about the social side, then that would be the thematic, where you're just looking at that one. Impact first is where you're looking at the impact before you're looking at anything else. And you can see that the orangish bar at the top stops there, because if you're looking at impact first, you are sometimes saying, I'm willing to accept lower returns because I love this impact. It's not always the case, but it's possible. And then at the very end, you have philanthropy. And I think it's very important to distinguish between investing and philanthropy, because sometimes people say, well, if you're doing good, like, isn't that just about giving money away? And it's not really. It's about investing. And as I said, it's about looking at corporations that are doing the right thing and helping them do even a better thing. So next slide, please. So when it comes to your values and you're looking at socially responsible investing, how do we do this? So we look at negative screening. This is what most people have heard about. So this is where we're saying we don't want tobacco, nuclear, arms manufacturers, sometimes fossil fuel divestment would fall into this. Sometimes pornography, adult entertainment. So they're negative screens. Alcohol is a very typical negative screen in the States, but somehow in Canada, we don't seem to mind as much. So there's a lot of alcohol. There aren't that many alcohol companies around, but they're frequently not screened out of Canadian portfolios. Positive screening is where we are looking at areas that we want to support that are so we're actively looking at them. So an example of this, probably very well known would be Tesla, where we're saying, we want electric vehicles. We think this is the wave of the future. There are also companies like NFI Group, which makes hybrid and electric buses for transit systems. So that would be a great company that you would want to screen into your portfolio. Companies that address water efficiency. So there's lots of companies like that you would want in there. Some areas that we would like to invest in are not investable. So there's no or limited product available. And that's unfortunate, but it's the way it is. Then there's what's called ESG integration. So ESG integration can occur along with negative screening and positive screening, or it can occur in isolation and there are no screens. So ESG integration is simply saying we're looking at environmental, social, and governance factors in addition to our financial metrics, but we're not particularly saying that there's a group of companies that we're screening out. And this is most commonly happening, I would say, in today's world around the extractive industries, oil and gas and mining, that a lot of people just don't want oil and gas stocks, so they're negative screening, they're screening them out of their portfolios. But a lot of people are saying, well, oil and gas isn't disappearing tomorrow, so I would rather have the best oil and gas company in my portfolio. So I'm looking at environmental, social, and governance metrics to determine what that is. So you're saying, let's do best of sector rather than screening out entire sectors. Once again, you can have thematic investments here, whether that's around environment or the other area that I find many people are interested in thematically is women in leadership, diversity on boards, those sorts of themes. And there are specific products that cater to that kind of desire to say, well, let's see who's doing a better job in terms of diversity and the advancement of women. So the next slide, please. So this is a finding. It's a nice little infographic from MSCI, and it talks about why people want to do this. And I think this is pretty common for most people, and that you'll probably see yourself in here. So there are, you know, it's like an old Venn diagram, if you remember from high school, where you've got investing with your values, you know, making a positive impact, making a better world, and then reducing risk. So all these three things are important. They're also areas where they all intersect. And I would like to say that tiny, tiny white bit in there where they intersect is actually much larger. There's a lot more overlap in these three things than this particular diagram shows you. But it does, I think, in the interest of being able to put all that wording in there, they've had to make the circles like this. But it's not so exclusionary that if you say, I want to make a positive impact, it means that you are not investing with your values or you're not looking at risk. You're definitely getting all three of those. Next slide, please. So these are, I'm going to give you some examples now, because I think you hear ESG thrown around all the time, and then you end up kind of saying, well, what does that mean? What does that mean? So some examples of environmental issues. I think you have the ones, the usual suspects that everybody is aware of: GHG emissions, renewable energy, joined now by energy efficiency. I think what's coming up a lot now is plastics. There's a real concern about single-use plastic, which is being addressed by our governments as well. And I think part of this stems from the amount of plastic that's found in the ocean now, and the impact that that's having on our waterways. And the fact that now they're actually finding micro beads of plastic in humans, in us. It turns out that we've ingested a lot of plastic because there's so much tiny, tiny plastic everywhere. Water use is also really important. As Canadians, we often think we've got the Great Lakes. We have so much water here. We're very lucky. We're blessed to have that water. But water use and water efficiency is very important in many, many areas of the world where they're seeing horrible drought. And then I think the most recent things that are coming up are biodiversity and deforestation. And these are caused both by climate change as well as by increased urbanization, you know, the deforestation, all of that. And so it's kind of nice to see that we're looking at what are called now nature-based solutions. So ways of thinking about, well, you know, what can nature do that's good for us, and how do we harness that as opposed to simply destroying nature, which is something that we've done for a long time. So as an example, you know, when a forest is turned into lumber, we cut it down, then all of a sudden it becomes part of our economic system. But what we're trying to do now is give that forest a value in and of itself, and particularly maybe with respect to its own services in terms of being a carbon sink, absorbing carbon dioxide, those sorts of things. So next slide, please. So social issues, I would say the S in ESG has been something that has not had a lot of attention, but in COVID, it has really come to the forefront, and I'm very pleased with that. So labor standards, again, has been a very traditional one in community relations. Now we are looking at workplace diversity and inclusion as something that's very important, and employee training, education, and support. So what happens when entire sectors disappear? So part of this is about having a just transition if we're moving away from oil and gas. But it's also about saying, well, if we're working from home, how do we make that inclusive? You know, how do we make sure that everybody can work from home because they have internet, because they have laptops, all of that? and then human rights and the supply chain. So these are all important issues, and I think many of them have moved more to the front with the combination of COVID and the Black Lives Matter work that we're seeing being done. Next slide, please. So governance is, I think, the boring one. People hear governance and they think, oh, you know, who cares? But there's a couple of really interesting things going on in governance, and one is executive pay. So this is looking at how much are the people at the top making, not just in and of themselves, but possibly if we're looking at vertically, what's the multiple of how much they make compared to how much the average person is making. Board composition, which is something that we're seeing a lot of now, is also a governance issue. And then are they paying tax? Bribery and corruption issues, which again are not necessarily as big in Canada, but certainly are elsewhere. And then lobbying and political contributions. So particularly with the last American government, people who were lobbying and who were on side with that government, companies were being asked, like, why are you doing this? You know, why are you contributing to certain candidates who are espousing views that we definitely don't agree with? Next slide, please. So climate change, this is very important. So climate change is now considered material. So material, when you talk about a company, means that it has a financial impact. And one of the things that we have now is something called the TCFD, the Task Force on Climate-Related Financial Disclosure, which is a set of, it's a way for companies to report on their climate-related issues. And for different companies, these are going to be different things. So for an insurance company, this is obviously going to affect how they are insuring. But for a real estate company, it's going to involve, well, what is their real estate in areas that might be at risk? So it's going to be different for different people. And so Michael Bloomberg chaired this task force along with our very own, next slide, please, Mark Carney. So Mark Carney, as I hope you all remember, used to be the governor of the Bank of Canada. Then he went to become the governor of the Bank of England. And now he is the UN Special Envoy on Climate Action and Finance. And he has written a book about value and values, which I have, but I haven't tackled yet, but I've heard him speak about it. And he is really going to be at the forefront of this because COP26 is happening in Glasgow. And he's got a couple of, he's created a net zero committee that's going to be working between now and November. And he's also looking at hopefully getting everyone to adopt the disclosure in the Task Force on Climate-Related Financial Disclosure, on the TCFD. So this later on, I think they're going to post the presentation. You can take a look, and it's got Mark Carney talking. And sometimes I find these short videos are I don't know, maybe more accessible for people than reading pages and pages and pages. So next slide, please. So this, where he's talking about originally climate change was just a risk, and now we're seeing the opportunity, and this is what the focus is on. This is what you're going to see all the time is net zero, net zero, net zero. This is what everyone is talking about. And when he's talking about private finance, that's publicly traded companies. He's distinguishing private finance from governments. So governments definitely have a role to play, but the idea that he can, and he's got you know, a great track record and a lot of credibility. So the idea that he can bring the public markets on board to net zero is very exciting, and we'll see how that plays out over the next months. So I think it's already 6:30. So I'm just going to go through these really quickly. So this is the kind of traditional investing part. And I know that I always find there's quite a broad range of knowledge when I talk. So some people know a whole lot about investing and some people know almost nothing. And there's a full spectrum in between. So your investments, some people say, well, I don't have any investments, but you probably are contributing either to an RSP and a pension plan or to the CPP. The Canada Pension Plan. The Canada Pension Plan Investment Board has a responsible investment policy. And one of the interesting things that it has done very recently is that it has combined its renewable energy group with its traditional energy group, saying that, you know what, every decision we make with respect to energy has to be done through the lens of what is happening with respect to climate change. So I think that's a big positive. If you go on to the CPPIB website, you can take a look at some of their investments, which you may like, and some of their investments, which I'm sure you won't like. But you can also see their plan, which is just kind of useful because it's our plan. We're all contributing to it. So you may have a group RSP at work, and if you do, there are some mutual funds, and I would say there are enough mutual funds now that you should have a socially responsible option, and if you don't, you should be asking for one. And I think in general now, because most providers have something, if there is demand from the employees, you will get that. Then you might have your own registered plans, an RSP, a TFSA, an RESP. So all of these are baskets, and you can pretty much put anything in them, right? And I think some people don't always think of that as a concept. They think of it, your RSP, as a thing, but it's not a thing, it's a basket. And you can put socially responsible investments in it, you can put bad investments in it, you put GICs in it, you can keep it in cash, whatever you like. And then you can also have non-registered accounts, which most people, I think not as many people do have, but again, it's a basket. So next slide, please. So your workplace plans, I'm just going to actually skip over this slide to the next one, please. So in your registered plans, as this is what most people do have, you've got your RSP and your TFSA. They are both really good savings baskets. The key difference is if you are in a higher income tax bracket, you want the tax deduction that goes with your RRSP. And once you've maybe made that RSP contribution, or you're not in a place where you want to make it, then your TFSA has a lot more flexibility, as you don't get any sort of tax benefit for contributing to your TFSA, but you can take money out of your TFSA without it becoming income. So it's much more flexible. And the next slide. So investing, and this is what I alluded to in the very beginning, where I said that socially responsible investing is an investment strategy. So you're investing this way in the same way that you're doing any other sort of investing. You're building a portfolio primarily using asset allocation. Assets tend to be divided into cash or near cash, fixed income, equities, and sometimes alternatives. But in the SRI world, sometimes impact investments. So your fixed income can be GICs or community bonds, and often here you're thinking about who is the issuer. You can also have individual bonds, bond funds, bond exchange traded funds, and all of these have socially responsible or responsible products that go into those. And the same with equities. You can choose an ETF that's based on a socially responsible index. You can choose equity mutual funds that have various socially responsible criteria, or you can buy individual stocks. I'd also like to say that there's various risk levels, because sometimes people think of this as something that's very high risk, but it doesn't have to be. You can have a very low risk socially responsible portfolio. It goes right across the risk spectrum. Impact investments are newer. I would say this is a bit challenging, and I'm not going to go into it too much because the word impact is now used in all sorts of ways around responsible investing. And so it's a bit challenging, I think, to identify what is an impact investment and what is not. But when I think of impact first, which is you have an intention to make an impact, and you usually are getting market returns, but you could choose to get concessionary returns. Next slide, please. So with investment products, there are a lot of products out there. There's not a lot of standardization. I don't necessarily think there ever needs to be. So you have to think about, what are your values? What are the values of the product? And is there a match? So if it's very important to you that you be fossil fuel free, and you need to find a fund that's fossil fuel free. If you're more interested in a just transition, then thinking about, there might be companies that still do some work in oil and gas and they're working towards a just transition, that might be a better fit for you. So greenwashing, I would say, is something to be very careful about. A significant amount of products, mutual funds, ETFs have been launched in the past year as ESG has just exploded. And I would say a lot of those have the label on them. And it's not very clear what they are doing that is socially responsible. So ideally, looking for a product that has a little bit longer track record on this and going to the prospectus. Now, I know the prospectus can be daunting. It's hundreds and hundreds of pages sometimes, but there's usually only one page that talks about what is this fund investing in, and that's the page that you want to read. So just find that one page. The other thing you can do with mutual funds is you can go online and look at their voting record. So especially on environmental and social and governance resolutions, you can see if they are voting in favor of those resolutions. So this goes back to the whole, are they just talking the talk or are they walking the walk? The Responsible Investment Association is Canada's umbrella association to advance responsible investment. And they have something called the RI Marketplace. And that is just a huge listing of every RI product that's available. So if you just kind of want a one-stop, it can be overwhelming, but you can also sort through it a little bit. So I would suggest that you take a look at that. Within the RIA, there are also advisors who hold themselves out as specializing in responsible investment, and I'm one of them. And I would say that most of those advisors are, if you find the RI Marketplace overwhelming, you're not exactly sure where to start, I would guess that most of the advisors that are on there are happy to spend not a long time, but 15, 20 minutes, maybe steering you in the right direction. So I would certainly say reach out to them and have a quick talk. Next slide, please. So that's it. So I don't think I've gone over time too much. So let's take some questions, Patrick, if there are some.
Hi, I'm appearing because I'm the backup for Patrick, and I think there was a little bit of a glitch on his machine.
Oh dear. So, okay.
Yeah, I think it's coming on, but I think that, given that it's like still starting up, so I'll appear. And so, hi everyone, I'm Stephen. I'm also part of the SCN, and so I'm covering for Patrick now, and we've got some questions from the floor. So allow me to start, and I'll just go in the order it has appeared. So the first one is actually about the fossil fuel divestment. So the question is, how long will it take realistically for shareholders to create a pressure that's big enough for the fossil fuel companies and the banks for it to take effect?
Well, I think to some extent it's happening now. So I would say in 2012, I think Bill McKibben wrote a really seminal article in Rolling Stone about fossil fuel divestment, and that's when things really got going. But last year, Shell, in its annual report, actually cited the fossil fuel divestment movement as a business risk. So I think we are seeing that, and a lot of people are talking now about the fact that the oil sands companies in Canada need to be thinking about sunsetting. So I think that we are having an effect, and the more people that join that, the more that effect will be. But certainly, I think it's not just reputational risk, which is where it started, but I think we've definitely moved into saying, these assets will be stranded assets. They cannot come out of the ground if we want to stay at a level. I don't know. I think 350 is way historic, and we're over that. But even if we want to look at Paris Agreement, I would say that most of these companies cannot bring out the oil that they have underground. So it's happening now.
It's happening, right? I guess maybe the question is like the pace in which it's happening, because it's just not a straight line. It's like, it seems the right thing to do, but there's still a lot of pushback from all the invested stakeholders. So.
Yeah, and I think that will happen. I would have to say that I'm pleased, because I think that we went at a snail's pace from 2012 to maybe 2019, and it's really picked up. But I think one of the other issues around the world, but certainly for us in Canada, is the idea of a just transition. So when you're looking at the companies having stranded assets, you are also looking at stranded workers and stranded communities. So I think it's very important in Canada, especially but anywhere where there are a lot of oil and gas workers, that we step up and look at retraining those workers. We look at if a community its tax base is primarily coming from an oil and gas company, and that oil and gas company is closing its doors. Well, what happens to that tax base? What happens to that community? What happens to the stores and the people that live there? And I think the just transition is something that we have to pay a lot more attention to if we are really going to get oil and gas companies shut down.
Right. And I guess as part of the conversation, there's also talk about trying to nudge these industries, right, to move into an area where they could still use their stranded assets, but not as fossil fuels. So it's been talk about like, how do you extract the hydrogen out of these hydrocarbons, right? And then transforming these things to then become a source for clean energy, right? So there's been talk about that. And I guess then coming from the SRI angle would be then, would there be specific investment areas into such clean technology companies to try and spur that movement?
Yeah, so I'll say two things. I mean, one is that I think a lot of existing technology Canadian companies have can be used to clean things up. And we saw this with the federal government giving a huge amount of money to Alberta to clean up orphaned wells. And I think that that's something that's going to happen around the world, that if we are going to decommission these assets, it needs to be done in an environmentally sensitive way. And that is going to require the kind of technology and know-how that oil and gas workers have.
Right.
With respect to new technologies, I think it's hydrogen is important. I think battery technology is important. But I would say a lot of this is at this point a little bit speculative. So you do want to be investing, but you also want to be careful how much of your portfolio you put into this. And I think it's kind of interesting, but I would say that 20 years ago, Ballard Power was also a very exciting company. And we thought that by today, we would all be driving cars that were powered by Ballard fuel cells. But instead, we're looking at electric vehicles. Right. So we're still, I think, looking now at fuel cells, hydrogen fuel cells for longer haul transport for trucks, where the loads are bigger and you don't necessarily have charging. So, but I think it's hard to know right now how everything's going to play out. Right. So you have to be careful about betting too much on something that might not turn out to be where the future is.
That's true. That's true. Especially when you're thinking about actually wanting this to be also getting your returns, right? You're not just putting money there as a risk, unless you are coming from the angle of like investment, like philanthropic for that reason, right? So, okay, so that's a segue for one of the questions we have. And the question goes like this. Are you aware of any publicly traded companies which are developing technologies for actually pulling carbon out from the atmosphere, which is the, the carbon, what do you call it? The carbon capture.
Yeah, I think that interestingly, some of the existing oil and gas companies are doing some work on carbon capture because they're viewing that as a way to green themselves. But I'm not sure if that's where you would want to invest because it's still a very small percentage of their revenues. Right. But it's something to think about. Other than that, I think a lot of the carbon capture technology is still being done in an academic environment with universities as pilots. So there's not a lot of carbon capture that's easily investable.
Right. Yes. And I think I've been reading like news about like the dollar per ton of carbon that you extract. It's still too high to be commercially to be viable, right? So maybe when that number drops, then it becomes more viable. And then if you then bet on the right technology, then you can take off, right? But still, you got to wait.
Exactly. And I think that's why we're looking at these pilot projects that are happening to say, well, what can we do? And what's the best system? What's the best technology? And these are all things, once again, that when we talk about the just transition, that the federal government can be supporting to say, well, these are areas where we have a lot of knowledge already. So let's put that knowledge to work. And these people who are, have a lot of technology skills and generations of oil and gas skills. And help them figure out how to do this.
Okay, thank you. I have one question which I'm reserving now to kind of like the tail end, and actually maybe it's because of the way you've been making this so much easier to understand. And so the question goes like this. How do we find a financial advisor and what kind of rates do they charge?
Okay, so the how to find a financial advisor, I think, is it's if you're specifically looking for someone, then you would go on to the Responsible Investment Association website.
Right, yeah.
And there are a whole bunch of advisors. I would also say that in today's world, you can tell your existing advisor that you really want to do this, because I think I'm talking to a lot of advisors who are acknowledging that their clients want to move in this direction, and they're figuring out how to offer some sort of responsible investment options to those clients. Right. So I would definitely say do a little pushing wherever you are, because that's it might not have good results for you, but I think everything in the investment industry is demand driven. So the more that they see that clients want this, the more they are going to respond. But otherwise, I would definitely say go on to the RIA. There are profiles. Everybody's got a little profile up. You can see who you think is a good fit for you. Right.
Thank you, Suchita. I think that's all the questions we have right now. And I'd like to just hand it back to you to continue the second round of the presentation.
Yes. Okay, perfect.
Okay. So, Veron, can you turn on the slides, and I'll hide off the screen. I'll see you later. Thank you.
Slides are coming, guys. Okay, so this is shareholder engagement. And this is a question that people often, this is the reaction people have when they look at the holdings in, for example, a mutual fund or an exchange traded fund that is advertising itself as socially responsible. So what happens is that when you own shares in a company, you can raise ESG issues with management. You can do it just by talking. A lot of times, if you are filing a resolution, it's because the talking has not been productive. So I would say that most of the coalitions in Canada have ongoing dialogues with all the major Canadian companies on a variety of issues, and they are seeing incremental improvement. And if they don't see incremental improvement, then at some point they might just divest from that company and say, you know what, management's not interested in getting better on these issues that we think are really important. Otherwise, they are going to just continue, and sometimes they need to file a proposal, but often they will just continue working and seeing improvement. At the very bottom here, you can see the Shareholder Association for Research and Education, which is called SHARE. And SHARE is one of Canada's primary coalition builders when it comes to engagement with companies and bringing people on board. Because obviously the more shares that you're representing, the more likely it is that management is going to listen to you. So next slide, please. So what are people interested in? So this is this year. So proxy season is happening right now. As we speak, annual general meetings are going on and these resolutions are being voted on. So what you can see, and I think this is very interesting, is that the most resolutions are on diversity and racial justice. And this is entirely a function of George Floyd, about Black Lives Matter, the number of deaths, people talking about defunding the police, and racial justice. So that's just huge. That's followed closely by climate change, which has been right up there for the past number of years. Human rights issues, lobbying and political contributions, corporate governance, environment and water. Health, which is also coming up because of COVID, but also because the UN Sustainable Development Goals, one of them is health related, and some people are trying to match their impact to the UN SDGs. And then food, which goes back to an area where I think a lot of people do want to invest, and there aren't a lot of investable options yet. But regenerative agriculture, the food supply chain, hunger, all of these things. So that's kind of a broad, a quick and broad look at where the resolutions are this year. Next slide. So we're going to have, I think, a couple of stories which are really nice Canadian stories. So the TMX Group, which are the people who own the Toronto Stock Exchange, They endorsed a shareholder proposal on equity and Indigenous inclusion, and that is based on the Truth and Reconciliation Commission's call to action number 92, which is about business. And this is just a huge, huge first step. First, because the TMX is big in its own right, but second, it also it's going to send a message to other large Canadian corporations around the fact that they need to take action on this. And also, I think it might be kind of interesting that the TMX group, the TSX also has listing requirements, and maybe those listing requirements then also start to become more socially responsible, which would also cover a broad swath of companies that are listing on the TSX. So this is just huge, and this was also done by SHARE, as I mentioned in the previous slide, and the Atkinson Foundation. So next slide, please. So Chartwell. So shareholders were demanding change, and unfortunately, we didn't get change. So we did want Mike Harris gone, and Mike Harris is still there, but he has agreed to step down next year. So he's not going to be there forever. But I think a couple of things from this headline. So it's shareholders, including a group of nuns. So first, that speaks to the coalition that occurs around many different mutual fund managers, pension fund managers coming together. And just of interest to you is that actually nuns, religious orders, are at the forefront of socially responsible investing in Canada and have been for decades. So oftentimes you will see nuns bringing these resolutions, and they have just really done a great job pushing forward particularly social issues. And the next one. So this is board diversity, and one of the interesting things that you can see is the blue bars are the men, and you can see that the women, the gray bars, has gone up. And what we are seeing now, so this comes from 2018, which is, as far as I know, the last time that a really broad data set came out that we could look at and analyze. But the interesting thing, I think, to note here is that for a long time, when people talked about board diversity, they were talking about gender diversity. They were only talking about how many women are on the board. And I think in the past couple of years, that board diversity has really moved to looking at ethnic diversity, age diversity. So we're looking at those, those old white men on the boards, the pale male stale, and we're saying, well, you know what? We need term limits. We need board refreshing so new people can come on the board who are younger, who are representative of different constituencies. And we still do have an overwhelming number of white men on the board, but that is changing. So next slide, please. Amazon. So Amazon is one of the most interesting companies because many people love it and many people hate it. And I would say that personally, I'll let you know just right up front so you know my bias. I am boycotting Amazon. I don't use it at all for anything for a number of reasons. And one is the social impacts that Amazon is having. So they are not very good with their employees. So that's very challenging. And the other aspect, so recently Amazon had a union certification in Alabama, and they worked very, very hard to defeat it, and indeed it did get defeated. So I think what we're hoping is that they're asking for a diversity and inclusion audit. So they're asking that Amazon actually pay attention to who's in their workforce, who gets promoted, who moves up, what kind of diversity is there both at the entry level and farther up. And I think that will be very interesting. And this is going to happen tomorrow. So watch the newspapers to see what happens. Amazon has been, for the past couple of years, the company with the largest number of ESG resolutions brought. I think this year it's 9 resolutions will be at Amazon. So to take a look at the voting on that and the reactions to that will be very interesting over the next couple of days. So next slide, please. And that's it. So I have lots more I can say, but I think that there may be more questions. And if not, there are a lot of other things that I can discuss. So we'll see what else comes up. Oh, and we have Patrick back, I think.
Hey, no, I'm here. Sorry about that. My
Okay.
my laptop dropped dead completely, and then the whole thing. But thank you, Stephen, for jumping in so ably. We have a couple more questions, which I'll run by. One of them, it's a fairly broad question, which is, what is the current ESG score of Amazon? And I suspect that depends on which provider you're talking about. But you're obviously, you've shared your opinion on Amazon in terms of, you're saying they're not doing a great job by your standards. Where do they stand in the industry in terms of people saying, hey, they're good or they're not as good ESG-wise?
I would say, and this is also, I mean, I cannot speak for the industry. The industry is so broad and there have been so many new entrants. I would say in today's world, Amazon is in most ESG portfolios, but in many of them, it is on what's called the watch list, which means they continue to hold it and they're seeing what happens. And I would certainly say that what happens at the annual general meeting and what Amazon's response to that is will make a difference. But currently, I would say if you look at almost any ESG-oriented fund, you're likely to see Amazon in the top 10 holdings.
Okay. Second question. This is actually a question for me, and I think it might some of the people in the audience might find this interesting. In terms of, if a person wants to invest, sustainably using ESG principles, they don't have a lot of money, and often advisors, require a certain amount of investable assets. What, we have online broker, we have ETFs. What would you recommend for someone with a small amount of money and like to invest it responsibly?
Okay, so this is, I would say the first thing I have to say is compromise. And I know it's going to sound very trite, but we compromise in lots of other areas in our lives, and we have to compromise a bit around our investments as well. The more money you have, obviously, the easier it is to tailor your portfolio to exactly what you want. I would suggest Wealthsimple. Wealthsimple has, they started as a robo-advisor. Due to demand, they had a lot of people saying, I want to invest responsibly. So they have created some SRI ETF packages. And I think that that's a great place to start. And it's also, I think sometimes if you're overwhelmed and you're thinking, well, what do I do? Right. I use a saying from Voltaire quite a lot, which is the perfect is the enemy of the good. So if you spend a lot of time saying, I need to be looking at this and this and this before I invest my money, at least investing your money into those Wealthsimple SRI ETFs is going to get your money doing a little bit better than it would be in a non-responsible product. And it also is showing the investment world that you're driving demand.
Right. Okay, cool. Thank you. One more question. Are you aware of any nonprofit organization or other organization in Canada that, which is pressuring companies at the shareholder level to act responsibly? I think the one that's raised as comparable is called Share Action, in the shareaction.org in the UK. So, are aware of any company, of any organization in Canada that's engaging sort of similar activities?
Where you can get involved? Is that what you're thinking about?
I think, yeah, where individuals can, can, whatever that looks like, signing petitions or another, things like that.
There is a lot of stuff online. I would say that mostly, what you should do when you're investing your money, however little it is that you want to think about whoever you're investing your money with, are they involved in some sort of shareholder engagement? Because then right away adding your voice to that. I think that the signing of petitions sometimes is not that meaningful because I would say organizations know that it takes you a couple of seconds to click and then you forget about it.
Right.
So the other thing that I would say is that if there's an issue that is really important to you, particularly when it comes to, for example, the banks or TELUS, I would say if you write a letter, it carries a lot of weight, even though it's just one person, because they know that then it's taken you some time to research something, to write that letter. The other thing I do feel is that a lot of environmental organizations in Canada are doing a lot of work around the government side of things. And that's also very, very important. The public policy side of things is as important as the public company side of things.
Yeah, absolutely. Okay, cool. Thank you. I don't think I have any more questions. If there's anybody out there who wants to enter one now, we can put it on in the questions or the chat. Otherwise, I guess we're good. First, I want to say, Sucheta, thank you so much. This was really great.
Actually, sorry, can I just interrupt Patrick and just throw in one more thing?
Yeah, of course.
Which is that for the person who doesn't have a lot of money, the other thing is that notably, I would say in the past couple of years, all the major banks have introduced some sort of proprietary ETFs.
Right.
So the Bank of Montreal has a great lineup. I know TD has just started to offer. So that's another thing that you can do. If you bank at TD, you can talk to whoever at TD about those ETFs and just start there too.
So it's just a matter of doing a little bit of research, but pretty easy to find these days, I imagine.
Yeah.
Okay, great. I don't see any additional questions. So Sucheta, thank you so much for your time tonight, because this was great. And I can speak for myself, and I think for others when I say that we really enjoyed it, and it was very informative. So much appreciated there.
Okay, that's great.
To the audience, we will upload this. This is being recorded, as we mentioned. We'll upload it on our website under the Facebook page so that it can be rewatched or shared. And a small plug for the next event, which will be the Kitchen Table Climate Conversation, which is something that is done with Climate Fast in Toronto. We're working with them, and that'll happen sometime in June. It's about food issues and climate change in the GTA. So keep an eye out for that. And yeah, we encourage anybody in the audience to come and speak to us, go to our Facebook page, go to our website, whatever. Yeah, this has been terrific. Thank you so much again, Sucheta.
Okay, great. Thank you so much.
I guess we're done.
Bye-bye, everybody.
Thank you very much, guys. Appreciate it.